Hey, what if the smartest move in the AI race right now is actually not racing at all? So here's something really interesting happening in the tech world that I think deserves your full attention. While companies like Microsoft, Google, Meta, and Amazon have been absolutely throwing billions of dollars at artificial intelligence infrastructure, we're talking data centers, chips, power systems, the whole 9 yards. Apple has been doing something that looked almost embarrassing a year ago. Apple has been, well, kind of chilling on the sidelines. And now? That decision is starting to look absolutely brilliant. Let me give you the full picture here. Over the past couple of years, the AI spending arms race has been genuinely jaw-dropping. Microsoft committed to over $100 billion in AI infrastructure. Meta announced plans to spend up to $65 billion on AI capital expenditures in 2025 alone. Google and Amazon weren't far behind, both pledging tens of billions to build out the infrastructure needed to compete in the AI era. The thinking was simple: spend big now, or get left behind forever. Apple, meanwhile, took a very different approach. Rather than pouring massive capital into building out its own giant AI data centers or acquiring enormous GPU clusters, Apple has been leaning on partnerships, most notably with OpenAI, to bring AI features to its devices through Apple Intelligence. The capital outlay compared to its big tech peers has been relatively modest. Analysts and investors were genuinely nervous about this. Was Apple falling behind? Was Tim Cook asleep at the wheel while the AI revolution was happening? But here's where the story gets a serious plot twist. AI stocks have been selling off hard recently. The market is starting to ask some very uncomfortable questions about the return on investment for all this astronomical AI spending. Investors are looking at these mind-boggling capital expenditure numbers and wondering, when exactly does this money come back? Because so far, the revenue generated from AI products and services hasn't come close to matching the scale of investment being poured in. There's a growing concern that the industry may have gotten caught up in a build-it-and-they'll-come mentality that doesn't always work out the way people hope. And suddenly Apple's restrained approach looks less like falling behind and more like disciplined, strategic patience. Apple is not sitting on zero AI ambition, don't get that wrong. The company has been quietly integrating AI into its ecosystem, rolling out Apple Intelligence features across its devices, and it has the unique advantage of owning both the hardware and software stack. That's genuinely powerful. But it hasn't gone on a wild spending spree trying to out-GPU everyone else in the room. There's also something really important to remember about Apple as a company. Apple's entire brand identity is built around doing fewer things extraordinarily well rather than doing everything first. They weren't first to smartphones, they weren't first to smartwatches, they weren't first to wireless earbuds. But they dominated all of those categories eventually. The pattern is almost a tradition at this point. Now, this doesn't mean Apple is completely in the clear. The company still faces real pressure to demonstrate that its AI strategy can actually deliver meaningful features that make people upgrade their iPhones and stay glued to the Apple ecosystem. If Apple Intelligence turns out to be underwhelming, the patience narrative falls apart pretty quickly. But right now, with AI stocks under pressure and the market questioning whether the industry has massively overinvested in infrastructure before the demand fully materializes, Apple's measured approach is looking a lot more like wisdom than weakness. So here's the question worth sitting with in a world obsessed with being first: is Apple actually proving that being smart beats being fast?